to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Public offering here. Actually, I get the impression, I think that this, just FYI to the few people that do watch these videos, not really getting the traction that we really want. So don't be surprised, just FYI, we might be retooling all this and maybe getting rid of these public shows. Encourage people to maybe come on over and join the site and participate on the site versus just watching all this free content that we produce. Having said that, I think over the next let's say maybe the next few weeks, next month or so, I'm going to try and dial these down to maybe like 10, 15-minute broadcasts. Chris, can you got your microphone there?
I do. Hello.
All right, so at the 5-minute mark, either you can find some sort of sound device like a bell or something and ring it, or come on and say ding, 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 time to move forward. I need that from you, please. If you could do that, I'd appreciate it.
Sounds good.
I think what we'll do is we'll just do a quick overview of the major econs, sort of what the dashboard's saying. The 4 markets that I follow on a regular basis, and then, like I said, we'll head on over to the after party. And we'll try and keep the rhetoric to a minimum. So it is now 9:06 on the West Coast on 19th of December. This is the holiday season. So if anything, maybe this is a good time. And I noticed there's not a lot of people are sort of like, well, I'm out on vacation, Brian, so not really going to be paying too much attention. So anyway, here we go. Tuesday, 19th December is kind of holiday season. If anything, I think we're probably well into what they call the Santa Claus rally kind of market. I suppose when we look at the US dollar index in a bit, we'll see that as the risk off proxy is falling here. So risk on is piling on the long side. You have 1, 2, 3, 4, maybe 5 more shopping days till Christmas. I suppose with my dwindling numbers of family members these days, don't have to worry too much about Christmas gifts, and all Liam wants is a big chocolate bar, and he'll be happy for Christmas. Anyway, Econs, pretty big numbers coming out of the States, and if anything, this reiterates the idea. I don't think the Americans are anywhere close to finishing raising interest rates, and as soon as the market sort of kind of whiffs that the Fed might be done in raising interest rates, boom, in comes a huge surge of economic activity. No way in hell the Fed can be even thinking about lowering interest rates in that kind of environment. Interesting to see out of China, that inflation rate unexpectedly holds. They were kind of hoping that inflation would calm down here a bit. We kind of saw a stabilization of the insanity. Little totalitarian dictators kind of backed off on their communist policies and stuff. But that inflation pressure is still very, very strong. And even now starting to hear people talking about housing prices starting to ramp back up again. So don't see any abatement there. And probably the easiest way for you and the public to sort of gauge what the inflation deflation pressure in our society is, and it always has been this way. Nothing has ever changed, regardless of what idiot woke politicians are trying to ram down messages down our throats, and guys like Fink and stuff trying to manipulate the public into buying electric cars or whatever. Oil prices are starting to march back up, and energy prices starting to march back up, which I think will be sort of the catalyst for us to start getting another big inflationary push here. So there's your backdrop. If anything, they're probably going to set all this up. Asset prices, risk on, all that gets ramped up into the end of the year. And then we roll over in January, February as people start worrying about inflation again. And I do also think to a certain degree that the people that are sort of driving the bus in our society, I think they have objectives for prices into year ends, especially with regard to things like international currency pegs. And I think that there's a concerted effort to bring the US dollar index down and all of these international currencies up into the year end. So I'll be mindful of that. Interesting to see Japan finished fairly strong on the day here. Futures are also pointing higher here. I've often said that this is a pretty good sort of barometer for what to expect out of our session here in North America. And I think on balance, like I said, it just feels like we are into Santa Claus rally window. So we probably, I can't see them selling the market off here into the end of the year. Thank you. That's sort of the econs, what I saw driving the bus here this morning. Very strong econs. Quick overview of the broader market context. There's the US dollar coming off. Like I said, this, literally what you should do is sort of set your expectations based on what the US dollar is doing and then go and hunt setups respectively. So if you were thinking short US dollars, you'd be hunting longs in things like the euro and the yen and British pound and all that kind of stuff. If you were thinking short US dollar, you would be thinking long stock market, long gold, long commodities. Fascinating technical conversation here. Literally rallied right into 2.618 and just stopped on a dime. Beautiful analogy of chaos entering the market state once we got back into this trading range, and literally the bull just stopped in its tracks. I am actually scratching my head a little bit as to why the US dollar would sell off so dramatically here with housing starts being as strong as they are. And this kind of leads me to believe that, like I said, I think there's some finessing going on with prices into the end of the year. And you might just see an absolutely violent correction going the other direction once we get into sort of middle of January, beginning of February, which is usually what happens. And I wouldn't even be surprised. You remember the whole sickness bullshit that, like, literally they started the whole market is going to correct kind of idea right after that January options expiry, where the 1%, in fact, even that year I had pointed out that the 1% just sold just an absolutely staggering amount of stock right up at the top of the market. And then lo and behold, you had this whole sickness thing and the whole stock market collapsed into March. And then a big bailout came and saved the stock market. So highly, highly suspect. But, that's basically the hallmark of our 21st century capitalism. Stunningly corrupt. I mean, just stunningly. Anyway, point of the matter here is US dollar has topped out here. And looking at this chart, you should expect to see stocks up, commodities up, oil up, gold up, the whole thing. And basically, that's what we got here today. Right across the board, commodity sector, oil up a good 1.5%, gold up 7/8%, was actually up a bit higher. Interesting to see yield corn having a little bit of a slog here. Maybe we'll finish off the video in a few minutes looking at the corn. Quick review what I've been doing here today, I suppose. Opening range trade. Actually, this is a really interesting one because opening range trade here in crude today kind of gave a bit of a head fake. But, I guess I've been playing this game so long. And actually, I got sucked into the head fake yesterday. But when I had my opening range trade here this morning, there is that first firm minute. Did get a long push to the upside. And I even said to my trading partner, I'm going to risk against a break of this low because they gapped the higher here. And this looked really suspicious. And sure enough, they ticked it down through that low and then straight up. So a little bit cheeky of them. I kind of like, in years gone by, I used to measure the 3-minute range prior to the open and used to trade that. So maybe that's a little bit of that spilling over, but nonetheless, half decent trade. 42 ticks just on the sell one at 1 to 1, one at 2 to 1. And then I was able to take another 67 ticks I actually let the trade go on the fail at Hoag's weekly kickoff level. And I even went on Top Step and I was even like, hey, thanks for the level, Hoag. Awesome. Great job. Worth 50 bucks. It looks like the market's kind of playing with this level right now, up, down, up, down. So I don't necessarily know whether we've actually finished with this level yet. But as you can see, it's just sort of oscillating around under, over, now a big fat M coming back. I don't know what's going to happen here, but I'm off on the sidelines and we made our ticks today, so I'm happy. Looking at the other markets I like to follow, gold market. Well, you'll notice here, like I said, with the US dollar sort of melting down here to a certain degree. Suppose the US dollar hasn't gone through that Friday low yet. So that was this image. Maybe if we do go through this low, that creates an AB equals CD, which launches the gold up through its previous highs. Maybe the gold here is just waiting for some resolution of that range, but you can see there's the exact opposite of it. And I think we were talking a little bit about bot setups. You can see it's pretty well-defined little W, which I think, if you think AB equals CD, I think we're heading up into reload zones. And you've heard me talk about candle body highs for trade location. So we got 4669. We got the AB equals CD. Got the candle body high for trade location. You get some sort of spike up into this area. AB equals CD up into here. I don't mind that. And again, it feels as though there's an agenda to push this thing up into the year end, up into these levels. And then also, too, I'm hearing a lot of people are getting really, really bullish of gold here. I don't know whether that's warranted or not, but anyway, we'll cross that bridge as we come to it. For the day traders, interesting level if you actually did want to take short shots against this little M top. I wouldn't fault them. So as you can see, I have a little you can short here. Looking at the stock market, and again, as I sort of started the broadcast off, it feels as though we're like very comfortably into Santa Claus rally mode. You can see 2.618s off of this bottom that came in here following last week. We consolidated. Actually, I drew a smaller AB equals CD because I wanted this consolidation to hit 33, which sets up this AB equals CD. And I do find it interesting that this, if we, just draw this A to B kind of idea and then clone that. C to D, you notice that takes us up. There's that target and right into 4669, which I think is realistic. And then also too, we have ATR scripts that come in above 66% of this move. So you'd want to be locking in profits above here anyway, if you were long. And there's a big fat weekly Hoag level that probably is going to get some play here before they're done with this. So, there is your Santa Claus rally. Ho, ho, ho. Is it a good idea to come in and chase this right here? Probably not. I think Chris actually said he took an opening range trade on that stock market, and that worked pretty well for him. But unless you're trading those opening range kind of trades, I think probably you're coming a little late to this party. And the Europeans are gone now. In fact, actually, we were even humming and hawing about chasing lower time frame setups potentially coming in, but a lot of the liquidity's gone. Once we hit 8:30 Pacific my time, the Europeans are gone. We're into this holiday session, so it's going to be kind of wonky. That's probably as good as it gets. And oh, what a big surprise! Here comes a doji. Finishing off our round out, like I said, I like to look at the oil, the gold, the stock market. Then we take a quick boo at ye old corn. I'm still looking at the December contract. This December contract comes up here at the end of the month, so it's a little bit different than the rest of the futures. And you can see January is not really trading that much. I might take a look at the Marches, just see what the volume looks like. But right now, I think we're still in the Decembers. And it sure looks to me like we're stuck in a trading range here. So bottom of the range looks to be this gapping level. And this hole here is basically saying, price is going to have to come back to that level at some point down the road and fill that in. It would be interesting if we go out into further futures contracts and, all you, aficionados, um, maybe you might want to take a look at that and just see whether there are gaps in the Marches and Junes and stuff. I think just in the short term, I think you could make the argument kind of like the gold in a weird sort of way. Top end of the range appears to be about 43, let's call it 44. ATR is probably going to stop this thing against these recent highs. You can see how the rally this morning stopped right up against that high there. And bottom end of the range appears to be just about 40 G's. 40,200, 40,400 area. And again, you can see how ATR is probably going to stop that. And I guess my feeling here is that if we do lose this level in earnest, we're probably going to have to come back to this. And it's not really the crispest trend line, but I just sort of played connect the dots off of these lows, tried to connect as many points as possible. And that kind of aligns up nicely with that gapping level. And it does look to me like you got 1, 2, 3, 4, and then this cute little low here. I do like this as a bit of a Wyckoff check, sort of think previous market structure. Honestly, like this whole area here on the Bitcoin chart does look very vulnerable. And that's a couple bucks, folks. Just be careful. And then, of course, just bringing it full circle, we look at the weekly chart. I've said this repeatedly to all of you. I don't see any reason to change my thinking here. Does this now actually fire an inside bar? Inside bar fractal is an inside bar within an inside bar, and that actually creates a little double top. If we go down to say like a 30-minute chart, there is the double top. Of course, you've heard Brian barking about, on the lower time frames, we had rejection in reload zones. I suppose you could also argue that ICT guy, his concepts. So it really shouldn't surprise us that we've seen a bit of resistance come in at the top end of this range. There is the inside bar off the 4-hour chart, and you can see how that's a cute little double top. So really, I wouldn't have a problem if somebody said, well, Brian, I shorted the break of this low, which was 42,800. And I'm just riding the shorts now. So you can see we had the bear had the ball. The bull took over the ball. Remember, we talked about that level yesterday. And now I think you can make the argument that the bear roared back to life and took back the ball right there. Actually, look at it. I still have bear there. So I never even did change that. So I think the bears got the ball. This was a V bottom. V bottom should be tested. Looks like there's a little bit of a gap down here at about 41 and change. So I would expect some sort of test of these lows. And we can't really get bullish again until the bull comes back and we get like a 12-hour period where we carve out some sort of fractal pivot here. And it just isn't anywhere in sight there right now. Finishing off this video, I think we're probably good on time here. Some of the little ones, noticing a bit more red on the screen here. I mean, there were some real treats. And of course, this is the beauty of the little old lady strategy and approach is you don't really have to actually time your purchases too well. It's all about risk management and just forcing yourself to come in. Don't take too big of a bet that you can't just sort of sit on the position and just wait for the asset to perform. And this is the reason why we play the venture cap market. I mean, we all know that there's a whole bunch of trapped bulls that would really like to get released on any kind of rally into that wick up there. And you can see that that's up around 12 and change on this thing. I don't even think we're even there yet. No, we're not even there yet. So, if we do crazy things like reload zones, you can see there's 61.8, good old mountain man. I mean, hell, you can talk about confluence of levels here. So, obviously I don't want you coming in and buying something like that up there. But anywhere down along here, thinking about, well, if price can get up into this area down the road, can I get a double off? Can I sell half of the position? And actually, I guess I have it on a different screen. Maybe it's over here. And create that risk-free trade. And actually, I was quite pleased to see that, people even responding on social media and stuff are saying things like, Brian, since I've been listening to you and I've heard your spiel and all that kind of stuff, I've incorporated this and it sure makes life a lot easier. Once you sell half on a double here, and in this particular case, it was even more than a double, so there is plenty of money to pay the tax man when he wants his chunk. Then really I have no risk on this trade. It could do any old damn thing it wants. I mean, what a big surprise. It's come up and banged into a 50% level. I mean, that's basically what we teach people. But if anything, the point that I wanted to make here, I don't know what happened to me in October, November, but I missed a whole bunch of really, really good ad opportunities on this name. But nonetheless, the point here is even with this trade, it was okay. Now I've established a risk-free trade. There's no risk on owning these coins for the rest of my days. I might just reload and add another car here on a pullback against these lows, and I fully expect that to happen at some point down the road. But it's just a great illustration. Just keep it simple, stupid. Don't overthink this stuff. Make sure to take reasonable bets, reasonable bite sizes. So if this thing does go off the board, it's not the end of the world. And just make damn sure that when these things double and triple and stuff, you're taking profits and paying yourself for your efforts, because that's what this is all about. A lot of this is more about like risk management and how you manage your money than being an awesome market timer. It's really more like the proper expression should be, I'm a really good market risker. So anyway, food for thought for you. Another win. So throw it on the pile, more free coins, rinse and repeat, and we'll do it all again tomorrow. All right. All right. So there you go. I think we'll probably leave it at that. That was about 20 minutes. I'm going to try and get into the habit of these free videos being around that. And of course, today is Tuesday, which means that we have Mr. Panicook himself. If you're looking for a crypto expert that you can trust in this space, I mean, there are quite a few, and of course, you might find your resources on your own. And there's a bunch of people that I like to tout and stuff. But frankly speaking, I don't think I've met a better, more competent, more trustworthy crypto expert in this space than TRI CTO. Obviously, the good Lord has blessed us by having him part of our community and an integral core. But Tuesdays is all about listening to Penacooks and Sjord and how things are going over in his side of the pond. So let's head on over there. PMA for the win. Slow and steady wins the race. I hope you enjoyed that shortened broadcast. Keep it simple, stupid. On to our next after party show. And we'll talk to you all real soon. All right. Have yourselves a great day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take no wood nickels. And bye.